Hi, team.
Good morning, and thank you for your time this morning. My name is Maryline, and I am a proud member of this team here to present to you our financial analysis of G4S Botswana. I will be taking you through the introduction of our topic. I've got my colleagues Misani and Wame who will take you through the financial analysis. And lastly, I've got Martin who's going to take you through the conclusions and recommendations. So financial analysis is the gathering of financial data to assess a company's current, past, and future potential condition. This is according to Baran 2016. Financial analysis is a tool used by investors, creditors, and management to assess the financial performance of a company. This study was conducted using the vertical ratio. According to OCHIA 2019, a vertical ratio analysis involves converting the numbers on each financial statement into the percentage of the total amount. This analysis is based on a 2-year period, being 2019 and 2020. G4S is a part of the International Security Solutions Group, being G4S. It has 4 core functions, which are facility management, electronic security, cash solutions, and managed security. It's got 11 stores nationwide. And according to the G4S Botswana annual report in 2020, they've set their priorities as profitable revenue, cost containment, operational excellence, and employee engagement. Amalia et al. Refers to how financial ratios can be used to anticipate future growth. This is helpful for data. This is helpful information for individuals who utilize the financial statements. The financial analysis of the G4S Botswana is based on the following summarized ratios, as you can see in table 1. These ratios are based on 2019 and 2020. I will now hand over to my colleague Misani, who will take you through the financial analysis, starting with the profitability ratios.
Thank you, guys. My name is Misani, and thank you for joining us. I'll be taking you through the profitability ratios. Our first ratio is the gross margin. According to the financials, the gross profit margin stands at 29.43 for the G4S. This means that G4S is retaining 0.29 pula from each pula of their revenue generated in 2020, while the corresponding figure for 2019 is 0.32. According to the income statement of the group, it shows that the gross profit is standing at 56 million. The facilities management segment has been the major contributor, again, with the COVID-19 pandemic setbacks. I'll be moving to the operating margin. The operating margin of the company stood at 9.41% in the year 2020 and 13.13% for 2019. An operating margin which is above 0 of an entity shows that the entity is doing well. This is according to the Micro Trends 2020. Although there's a decrease of 3.72% of the company is still thriving, looking at the economical setbacks brought by the COVID-19. And now I'm going on the return on investment or a return on equity. G4S shareholders in 2020 were getting 11.79% from their investment. A good return on equity ranges from 15 to 50%. This is according to the micro trends. This figure may be below the threshold in 2020, but it should be noted that in 2019, the figure was well within the threshold. I'm moving now to liquidity ratios. Liquidity ratios is the company's ability to repay both in long-term and short-term obligations. First of all is the current ratio. The company's assets stood at 114 million against current liabilities of 32 million in the year 2020. The financial statement shows that the current ratio stood at 3.48, indicating 3 times the current asset can be able to pay off their debts or current liabilities. This could also mean that the company has 3.48 pula of current assets for every 1 pula or less of their current debts or liabilities. This is an indication that the company can be able to service its obligation should there be liquidation. I'm handing over to my colleague Wame to take you through the next ratios.
Thank you so much, Misani. As already mentioned, my name is Wame Sedirwa, and I'll be taking you through the liquidity ratios, the rest of the liquidity ratios. First of all, we have the quick ratio. G4S quick ratio stood at 3.36 in 2020, just 0.2 or 0.12 between the two. This essentially indicates that irregardless whether the stock is included or not included, the company is able to clear its current liabilities through current assets. A lower quick ratio means that the company might not be able to pay its current liabilities using current assets. This is according to Dara et al. We can therefore say that G4S is faring well in accordance to the quick ratio. I'll be taking you also through the liquidity ratios, the efficiency ratios, perhaps. And the efficiency ratios measure a company's utilization of assets and resources. Inventory turnover days is the first ratio that we'll be looking at. Inventory is categorized as a company's asset, which most companies use for resale to make profit, while other businesses use it for administrative purposes. This is according to Aigmang and Aseidu 2013. G4S has inventory standing at 3.9 million from its financial statements. And it seems from the results that G4S can take up to 187 days with inventory in its records, contrary to the 10 to 15 days for most industries. We can fairly say that there's a little bit of inefficiency with regards to managing inventory at G4S. I'll be moving now to the debtors ratio. The debtors days for the company stood at 46 in 2020, an improvement of 19 days from 2019, which stood at 65 days. G4S is trading using facilities in other areas of its operation. It has 23 million in its accounts receivable. This is quite a huge number to remain in the hands of debtors. And this essentially means that the company might have less cash available to use. Moving on now to the creditors ratio. It took 948 days for G4S to pay its debts compared to the 1,373 days in 2019. G4S has about 7.6 million standing in its financial that it needs to pay off. Typical ranges for the creditor day ratio for a non-cash business would be 30 to 60 days. This is according to Cinnamon 2010. This is not that it cannot pay off its debts. It's just an indication that there are efficiencies in their processes such that they don't have cash available to immediately pay their debts on time. I'll be now handing over to Mr. Martin Maika to take you through the leverage ratios and the rest of the presentation, the recommendation and the conclusion. Thank you.
Thank you, Wame. Good morning, everybody. My name is Martin. I will be taking through the debt or equity ratio, recommendation and conclusion. According to Lasan and others 2017, the equity ratio highlights the two important financial concepts of a solvent or sustainable business. Entities with higher ratios show new investors and creditors that the investors believe in the company and are willing to finance it. The company can buy assets through loans from different sources, though it is more common that assets are financed through shareholders' equity or issuance of stock. Normally, 50% is ideal for equity ratio. G4S is currently at 0.74 in 2020, an improvement from 0.64 in 2019, which is quite considerable and good for it, especially as we see a year-on-year improvement. Going to conclusion. Based on the financial analysis on the operation of G4S Limited, this is an entity that should be attractive to any investors, especially during the time where COVID-19 has affected the profitability of the business entities globally. This is an entity that shows that the current economic downturn is not much of a threat to its operation. This research can pinpoint the variables that have had the biggest impact and contributed to the new unfavorable outcomes. The recommendation for G4S, the organization must decrease its stock on hand, as holding stocks requires time to trade and ties up capital. The company has money in the hand of the debtor and should speed up its debt collection process. Even though the company is not running at a loss, the debt is too high. To help with the debt repayment, the idle assets may be sold. G4S should dispose its facility management business because changes in legislation and subsequent requirements for 100% owned citizen ownership saw revenue decrease by 38% and gross profit by 64%. Thank you, ladies and gentlemen. We are open for questions.
Thank you very much. My name is Bikuta Manga. I have a question for you guys. What strategies could G4S employ to accelerate its revenue collection?
Thank you, Mr. Monga. G4S could possibly outsource an expert or an agency on their revenue collection so they can fully focus on their core business or activities. Thank you.
Any other question?
Good morning. My name is Patsimo, and my question is, now that the return on investment industry average is at a 15 to 50%, how would you rate G4S's performance in 2020 as it has a return on investment of 11.79%?
Thank you. I'll take that one. I'm looking at the rating of 11.9%. It's still not a bad standing. I'm looking at the COVID-19 pandemic and its effects on the economy, like even in the global economy, like the whole world came a standstill. So even though it's below the baseline, it's still not that bad. They can still thrive. Thank you.
Okay, thank you guys. Mwisepi here. I also have a question for you. Your presentation was clear and precise, but I need to understand something. What is the typical range for debt-day ratio for a non-cash business? Yeah.
Okay, thank you, Seisa. Really, on average, it takes about 45 days. The average for the debtors days. Yeah. Thank you.
Okay. Thank you very much.
Any other question? Okay, I guess that's the end of the presentation. So thank you guys for joining us and thank you for your questions. So thank you guys.
Thank you, team. Well done.
Thank you.